Hi everyone, welcome to my YouTube channel. My name is Tabitha and today we are going to talk about how to make money in stock market, which means position investing. So there are different types on how you can make money in the stock market. It's not only trading, people also invest there and they do position investing. So position investing, a lot of people do it to gain dividend. So they want to earn dividend every month or every quarter. So they buy shares, hold them for more than 3 months, more than 3 years, or lifetime. So they get that. So the objective of this video is to really build passive income through dividend. So how do you do it? While you do that long-term investing. So you're doing long-term, but in the process, you're going to get dividend every month or every quarter. So how do you go about it? So if you are new to this channel, please subscribe for more videos and I will appreciate your business. Now let's look at the agendas of today. So we are going to narrow it down and make it more simple for you to understand. So you want to build a passive income through long-term investing while you get dividend payment every month or every quarter. So what do you need to do? Okay, you need to open account. So where do you open this account? It's very important if you are Canadian resident. Factors to consider. So before you do anything, most of the time you have to consider what are some of the advantages that you need to know before you get indulged in something, because it could be risky and you lose your money. So strategies use sectors to invest in. So all those one are the things that we are going to look at. They're just four. So let's look at them now. Go through this video and you will see the value in this video. So if you want to do position investing and get dividend payment every month, it really requires that patience for you to reach the goal that you want to achieve. So for me, because we are in Canada, so the account that you are investing in always matters because of the tax policies. So this one is passive income investment portfolio. So I choose TFSA and it depends on your room too. So you don't need to go over your TFSA room that is available for you. But the advantage of this account is that if you invest in this account, your gains are not taxable. So you cannot be taxed on the capital gain that you had within the TFSA. So that's the account that we're going to use to build our passive income. Mine, I already started mine. So if you want to do this position investing, the best account is TFSA. Some people use RRSP, but it just depends on how immediately you need the money, because TFSA is most taxable when you withdraw money from it. But TFSA, if you withdraw money from it, it's not taxable. You just take your money and that's it. So let's look at the factors now. What are we looking at before we choose the stock that we want to put our money in? So number one is, how do you study the chart and make the conclusion? So look at the weekly and daily candlestick and look at the fluctuation of the price historically and then currently, and you can predict the future. So maybe in the past, the price went too low, but somehow it recovered. So that will give you the confidence that even when you are invested in this company and the price keep moving up and down, it will not make you panic and sell your shares. You will keep on holding, knowing that it's going to recover based on the information that you get by studying the chart of the historical performance of that company. So the next one will be the second factor, which means like, how long do you want to keep this account? What is the goal? Other people keep it for life because they want to use it as passive income. So they're building wealth that will sustain their lifestyle as they live on this earth. So they keep it for life. So is that your goal, or do you want to keep it for like 2 months, 3 months, and then you sell everything and you use your money? So what is your goal? So that factor also count. The next one would be, so we have already looked at the account that you need to put your investment in, and things like how to study historical prices, charts, candlesticks, weekly, and all those stuff. We look at the duration. Now we are on the fundamental analysis. Before you choose those companies, how do they perform? What business are they doing? How do they perform in the last 20 years, 10 years, and all those stuff? So fundamental analysis is very important when you are doing long-term investing. So if you're doing that, so you have to know, where are you putting your money in? What is this company all about? Who are these managers that are making decisions? Have they done any mistake in the past? Is it going to affect the price? How are they doing their earnings? How much do they pay in dividend? So historical price movement, how long in business, all those stuff, all those factors need to be accounted for before you make decision. Let's say, for example, if I want to invest in BMO, I will do research on BMO. When was it started? What is the price? What is dividend? What dividend do they pay every month? Have they ever missed paying dividend? And what are type of businesses that they do, product and services, are they essential businesses? So all those things you have to check while you're doing fundamental analysis, and you will be comfortable putting your money there. If anything happened later on that you didn't account for, and then you won't really blame yourself because you did your due diligence. You look at the current ratios too, look at the dividend payout. So how is this company performance? How do they do when there is a problem, like external problem? So did it affect the business in the past? Because if it does, and then how are you prepared to handle that? So more on fundamental analysis. So fundamental analysis is really, really very important when you're doing the long-term investing, dividend investing, anything that you're going to keep for longer term. You need to know the company is good, because sometimes you can put your money in companies and then the next day you wake up and everything is gone. So you don't want to be that type. You need to know where you're putting your money, not in some sketchy businesses. No, this is really business. Their product and services are there. Are they essential product and services that people cannot do without them? Is that giving you more confidence? How long they've been in business? What is the earning? Right? So all those kind of stuff. Profitability. Like, is there any age or something that will tell you this company is not going to survive in the next 20 years? So all that is what goes under fundamental analysis. So that's another factor. So let's look at more into factors when dividend investing. So we have already looked at many of the factors, right? And the most important factor in this is like fundamental analysis. So you need to know very well how is that very important, and how to really interpret all those ratios and make your informed decision when you're doing investing. Investing is like more of guessing, but you have to back it up with data. If you don't have that data to back it up, you might end up making a wrong decision and it will cost you. So more of risk management is good. Review. So you have to also keep up with the companies that you are invested in. So review it, see what is going on, what are the news on those companies, is it going to affect them, all this stuff. So you have to do the review more on the factors when dividend investing. So we have all look at all those stuff, right? So we have look at the candlestick that you have to look at, and more on duration of the time you want to keep it, review fundamental analysis. Now no leverage that you need to do. Sometime even maybe you can borrow credit card money and put them inside there and then pay your credit card and do all of that. But borrowing the broker money is going to cost you more commission if you're keeping the stocks long term. So it's better you just use your own cash and use them to invest in dividend stocks, and you gain that dividend every month and every quarter as long as you keep up with your dollar cost average strategy of investing fixed amount every month. No stop loss is needed because the price is going to be fluctuating every now and then. So you don't need the stop loss. Okay, so now let's look at more on the strategies. So what are the strategies that you need to use? For position investing, the first one is long term. We are going long term. So when we are going long term, it's more of a psychological remove the worry. It remove the worry of worrying about the price movement and all those stuff because you have the target. You already done your due diligence of doing your fundamental analysis. You trust this company, so you have already done the historical price movement. So anything fluctuating long term is the best way. Just keep it like that. Forget about it. Keep investing in and enjoy your dividend. Dollar cost average, invest fixed amount every month. So the more you invest, the more you increase your number of shares and the more dividend you get. And if you reinvest your dividend, you are also doing the compound investing, right? So it's going to compound, and maybe in 2 years' time, you have achieved your goal. So those are the strategies that you need to know. Now let's look at the companies or sectors that to invest in. So the first one will be ETF. So ETF is mostly used for people to diversify their portfolio. They are really very stable because they're a group of companies made in one, and they are less risky, less volatile. So more of these things, you have to put them into your portfolio, balance out. The example are VDY, XEI, VRE, and XIC. So all those ones are example of the Canadian ETFs. If you go on the US side, there are many examples of ETF. So you can add the ETF from the US too. And the good news with ETF, they pay you dividend every month. So it's good, right? Get that dividend every month. You can easily reach $20, $50. So it's not a get rich quick scheme, but you can build a stable, steady growth. Number two will be REIT. So REIT are more of real estate investment trust. So you invest in companies that invest in real estate or they manage real estate. And these companies also pay dividends. Some of them pay dividend monthly, some of them pay dividend quarterly. And a good company would be Smart Center. Smart Center run to essential businesses. So that give you the confidence that this company is going to stay for a while. Allied property is another good REIT. Okay. And then you add more like Chatwells, all those stuff. Chatwell was affected by a COVID problem because it was trend to seniors, right? So seniors were affected by COVID and all those stuff. So that company already know what happened to them and all those stuff. So you can add rate from the US to balance your portfolio. The next one will be the bank stock. These are individual companies, right? So you need to do your due diligence. Why will you put your money in VMO? So how long has they been in business? What type of product and services do they give? Are those type product and services essential? Can people do without them? What competition is TD giving VMO? Is that something that will take them out of business? So you look at all those factors before you decide to put your money into any of the banks. TD Bank, Bank of Montreal, CIBC, RBC, Scotiabank, all those big companies, you can put your money in and they will pay you dividend quarterly. Yes. And if you have more money and you want to invest cross the border, you can buy from US too. The US bank, things like JP Morgan, good companies. So you can put your money there too. Another one will be owned energy stocks. So we already checked the account that you need to open. Another one would be the factors, strategies. Now we own the sectors to put your money in. Energy stocks. In Canada, we have Enbridge and we have also TC Energy. We have also Sencor. So before you choose these companies, do your due diligence, do your fundamental analysis, and be comfortable like investing in these companies. If once you succeed putting all the energy stocks in Canada, you can add the one from the US and build your portfolio. Hand $1,000, hand $500, all those stuff. It takes time. You have to be patient. Another sector would be more of the finance, the financial companies, and what we hear is the Manulife or utility stocks. Before financial companies, you go to utility stocks, things like Fortis, things like Canadian Utilities. And from there, we can now go to financial stocks. So you have the variety. So your things here is to do your research and see why you're putting your money in those companies. And are you going to get your money back or you're going to lose them? So it just depends on you. So add more of utility stocks to your portfolio there. Now let's see. Next one will be financial sector. So financial sector here in Canada, and Manulife take the lead. So Manulife will give you very generous dividend. The price is also low, so you can easily buy more shares of Manulife. And they are expanding their businesses, right? So they even go to Asian market, all those stuff. So Manulife is good. And if you want, you can add financial stock from the US as long as you do your research and be comfortable putting your money in those companies. Another one, which is the final part, is the telecommunication. And the best company here in Canada will be TELUS. So TELUS, I believe in TELUS, I also even use the internet. So TELUS is a good company, it's a stable local business, right? So they will pay you good dividend, right? Quarterly. So do your research and add more of telecommunication stocks companies in the US. And that is the end of the video. I hope you enjoyed this video and thanks for supporting and thanks for subscribing.